Today is Wednesday, June the 10th, and we're going to look at something different in the charts today. We're not going to look at the cloud of the Ichimoku. We're going to look at Bollinger Bands. And if you're not familiar with Bollinger Bands, we'll run through a very, very quick Investopedia description of it. But here's a look at the market as we start off with the FinViz, and you can see chop, chop. Fed did their announcement at 2 o'clock, and there was an immediate pop, then a drop. Tech stocks continue to do well, and the NASDAQ made another new record high. So let's take a look at our oscillator. Let's start with the Mcclellan oscillator, which is now coming down towards the zero line. Right here is the zero line. If you look at the raw numbers, let's just go back at the at Safari here in the browser, and let's look at the raw numbers for the Mcclellan oscillator. It's 74.37. The prior was 184, so it's on its way down. It's getting close to zero, 75 points above zero. Tomorrow, if we had an oscillator difference, an advancer to decliner oscillator difference of 959, we'd be down at the 0 point. And today was 1359. So anything where the advancers trail the decliners, by 959, which is a little bit better than today, and we're still going back down to zero. And that'll be an inflection point. I still think we're in a bullish position. Let's take a look at our volume stacked. A little bit higher than yesterday, but certainly not as good as Monday or Friday, but keeping in line with last week. So still overall, the volume is healthy. The decliners-led advancers looks like about the same as yesterday in terms of volume or number of stocks traded, and the summation index is now over 4,000. And when we see over 4,000, we see 6 months, 3 to 6 months in the future, peaking of the Dow Jones, like here, and there's your peak. Like here, and there's your peak. Like here, and well, we moved up. You don't see the same sort of dramatic shift, but here, and we had a peak up in this area here. So here we're over 4,000, and 6 months out, the Dow Jones is higher. So this is a long-term indicator, and it's pretty positive. Let's look at the S&P. Now we're looking at Bollinger Bands. And Bollinger Bands, for just for definition, let's go out to Investopedia. Bollinger Bands tell you when stocks are overbought and oversold, depending on their proximity to the upper and lower band. And we're not going to talk about squeeze. 90% of the price action occurs between the two bands. So when you're outside of a Bollinger Band, you're outside of 90% of the prior trading range that's being averaged by your Bollinger Bands. And you can see that we just sort of peaked on it last Wednesday. We were outside of the 90%, and then we were again on Monday, and then Tuesday and Wednesday we pulled into the Bollinger Bands. On the Dow Jones, you can see same thing. So we exceeded the Bollinger Bands on Monday with that big pop, and we pulled back in. On the NASDAQ, we are exceeding the Bollinger Bands today, right about now. And we stopped at a minor Fibonacci point of 114.6%, which is not a strong Bollinger point, but Fibonacci point, but obviously there were some sellers there. The volatility index did a doji. Not much, stayed below the 200. Let's look at some stocks now. Apple continues to just go nuts. Another big pop, but look at how far we are out of the Bollinger Bands. We started out of the Bollinger Bands here on June the 4th, remained out on the 5th, really on the 5th, and then the 8th and the 9th and the 10th, just well outside. So we have to be pulling back now on Apple, plus we've hit 127.2%. So expect some pulling back on Apple to become, bring it into more of a normalcy. But it's just doing tremendously well. Caterpillar also pulled out of the Bollinger Bands last week and then dropped back in. Still a good stock. I would like it to stay at 130 for a while longer. So trending or pulling back would be good for me. Home Depot, following the top of the Bollinger Bands. So following the top of the overbought line. Disney, let's take a look at Disney on the Bollinger Bands just for fun here. And it was rejected at the 200 simple moving average. Never really did fall outside of the of its Bollinger Bands. Nvidia powering away, now popped outside of the Bollinger Bands, now coming back in. As these two Bollinger Bands, the top and the bottom, start to move together, you get a squeeze action, and then you get resulting is that you're getting going to get a movement in one direction or the other when the two Bollinger Bands squeeze together, as they did in here, and you had a pop and then a drop, and then you saw the Bollinger Bands start to squeeze together here, came to the bottom of the band, and then just shot up. So you take a look for when these Bollinger Bands start to constrict, and that's when you're going to get a break in one direction or the other. But they will typically cycle between the top of the Bollinger Band and the bottom of the Bollinger Band. What else do we want to look at? AT&T, US Bank. Let's take a look at all banks. Big retreat by Bank of America, down 7%. Almost 3% for Goldman Sachs, 5% for JP Morgan. So the banks had a pullback day today. Bank of America back to the top of the cloud. JP Morgan, top of the cloud, and the 8 EMA. Citigroup, top of the cloud. US Bank lost the top of the cloud, was sort of touching on it for 3 days. So banks are starting to weaken a little bit. This indicates that the SPX might be starting to pull down. So we may not reach that gap. We may come back and fill this gap before moving higher. So it's certainly a period of uncertainty. Now the Fed has said they're going to continue to do what's necessary to pump liquidity into the market, but we still are certainly overbought. Prices of stocks, I mean, look at Tesla. Tesla passed $1,000 today. That's a big pop. Now over 400% of an original move that had a peak right back here. So if you look at December 2018, we're not even 2 years later now, and we've passed that move by 400%. So where are we headed to? I just feel that there's weakness up ahead. Long term, the summation index is telling us that's going to be good. So you can get out of the market now and wait until the fall, or you can just use some covered calls, because if you're in good stocks, you have some profits. You can buffer those profits by selling some July or some August calls. In the case of Apple, what I would do is I would look at the July 350 calls, which are probably paying quite well, and sell a 350 call, because you can expect some pullback in Apple now because it's just moved up too quickly. The news is out now about its new chip, and that's why you've got this kind of growth, but expect a little bit of weakness going forward.